All right, let's get a reading of that data and what's ahead. Pete McGuire joining us from XM. Pete, a very good Monday morning to you. All right, what did you make of those comments by Jerome Powell? I mean, was that to be expected, and perhaps were you surprised at the response on markets?
Well, Andrew, good morning. Pain for households ahead. There was no good news out of it from consumers on Main Street. And when you're looking at what happened to the equity markets, they got crunched on Friday night, and we're seeing that across Asia this morning. US dollar, big tick up, 109 for that US dollar index. Currencies have come under pressure. Crude hasn't moved. It's actually moved probably up. And the storyline as far as how they're going to manage inflation, yeah, we're strapping ourselves in, and let's see how we are at Christmas.
Right, that seems a long way off at this point. There's a lot to get through, of course, because we've still got the data coming to us. In fact, I was just mentioning there, as far as the readout on Friday with what was it, the core PCE deflator, which was well, it was up 0.1 for the month, 4.6 for the year, which was below forecast. But what did you make of that?
Well, softer than expected. You know, I take on board those numbers, Andrew, and we're conscious of them. And 4.6 was a better number than what the market was anticipating. But the reality of the matter is how the hurt is felt across global supply chains, what's happening from consumer land, and the issues moving forward to how we're going to manage that US inflation. And I'd like to see, you know, when you're thinking of Nat Gas hitting up 3% in trade, you're looking at the cost of energy. You really need to see, you know, crude at $80 a barrel and not at $103 a barrel. So I think the hurt and all of those other points, food costs and so on, need to be appreciated from a global standpoint. What's happening in, you know, major markets, China, Germany, and so on, with their weather conditions really impacting their supply chains and their overall economy.
All right, so Pete, what are you looking forward to this week as far as data is concerned? I guess the big headline will come at the end of the week with those US non-farm payroll numbers.
Absolutely, Andrew. We're not expecting it to be, remembering what happened in July, that really shot the ball out of the park, and it was double what consensus was. So we're not expecting that, but it's very difficult to really forecast what those numbers will represent. Friday night's the night of it'll either be fun or a little bit more pain, and that's where the week is really focused. We're putting Jackson Hole behind us, looking at those non-farm payrolls, seeing where currencies trade this week, and how severe the sell-off's going to be. Remembering we're up, you know, 7 trillion on those US equities in a period of about 8 or 9 weeks. How much are we going to evaporate or take that hot steam out of that market, and whether that's going to roll across global equities, and how severe the pullback could be with Jay Powell's comments.
And we've also got a raft of PMIs out this week as well.
Yeah, exactly right. We're keeping a very close focus on those. And they're always ones of, you know, are they going to be under that 50 handle or above it? And how much is the pullback? And how we, you know, take on board the just inhaling that data, and what impact it has to currencies, what impact it has to GDP, and so on across those differing markets.
All right. Now, I know you've also keeping a close eye on what's going on in Europe at the moment, particularly because, I mean, you think inflation's bad here, you think it's bad in the States. Well, it's even worse over there.
Absolutely right. And how long till we're, you know, matching the UK's numbers as far as that double-digit inflation? So there seems to be the major concern across the hurt of Europe. Very extremely high energy prices. You're putting summer behind you. We're in the tail end of it. Summer finishes this week officially, and you know, you lead up into the plight of natural gas and what the issues are going to be with the Russia-Ukraine war, and how you're going to heat, you know, Europe with demands of 60% or more of, you know, Russian gas. So how that's all going to play, it's going to be a very interesting, as I mentioned, up to Christmas, and you're correct, that next 4 months are going to be electric. You've got midterm elections, and there's plenty of excitement. Strap yourself in.
Oh, yeah. Pete, how's this all playing out in currencies at the moment?
Well, US dollar seems to be the king of the market, Andrew. You know, that 109 is the US dollar index for everyone out there. That's the first market I look at and most traders look at when you turn your screen on in the morning, what happened. So that US dollar index, you've seen a collapse as far as euro, 99.6. You know, how much lower does it go against that dollar? Yen, 137, pound, 117 handle, Aussies under 69. So it just seems to be a continual sell-off. And dollar seems to be reigning supreme, Andrew. King dollar.
All right, but I know you've mentioned it before, the oil price. You think ideally that needs to be closer to 80. It is 100 at the moment. Where are you seeing it going at this point?
I think it's going to edge up higher. We saw what happened last week with the Saudis came out on Monday and there was nearly a 10% reversal. So when you're looking at what happened and their comments about the futures market and what action was taken, and that's a wonderful case study for all the traders out there. Go and have a look at what happened last Monday. So I think that it seems to be an upward trend at the moment, and that's the fear that the market has. So yeah, it'd be very hard to contain inflation if you've got crude prices at $110 or $120 a barrel, Andrew.